Hey guys, how's it going? It is I, the real Randy Chavez, coming at you today with Nick Ward. I'm glad to get him on the podcast. Nick is in the blockchain digital assets group at Armanino, which is a top 20 accounting firm and leads auditing of crypto clients. And he's on the front lines of many of the current financial stress issues facing the crypto industry. How are you today?
Good, Randy. Thanks for having me.
Yeah, I'm glad you're on. So the when when they that description of you auditing crypto clients, is that in preparation? You like, hey, this is a stress test to do it for this company before the government does it? Or is it like the government pointing fingers, okay, that one?
No, no, no. Yeah. So, you know, when we're doing audit, there's kind of two arenas we operate in. We have companies in the private sector and then companies in the public sector that are, traded on the markets. And so, obviously, public company that's going to be traded is required to have an audit done. They're also required to have quarterly reviews done. So, in that regard, they're following typical compliance. And then on the private side, they're going to require an audit for a number of reasons. Could be their investors want it. Most commonly in the space, especially when it comes to exchanges, is they have to file for money transmitter licenses and all these others that you have to deal in trading assets, taking money, and so those require a financial statement audit by a third-party CPA firm.
Now, there is how many money transfer licenses there are? Stuff just, I guess that might go state by state or by country or and then global. Can you explain between those?
State by state, and mostly from what we deal with, while we operate globally. On my end, I'm usually on the U.S. side. But that being said, yeah, the global, each global, country or jurisdictions could have other licenses on top of that. But generally, the good news on the state side is generally you can kind of look to like Texas has a more robust one, so they'll kind of start there. And if you've gone through that process, then all the other states, most of those boxes to check are going to be the same.
Okay.
New York, of course, has the additional bit license
New
along
York
with,
sucks.
yeah, your typical one. Yeah.
Yeah,
It's
yeah, New York sucks.
what I think of the bit license. So,
So the typically for someone doing something like really global, how long would that take?
I mean, it's tough to put a timestamp, but I mean, a financial statement audit takes some time, but depending on how clean the company's accounting records are, how much time their team's able to kind of dedicate to the auditors, and then their experience going through an audit can
Yeah.
really vary how the audit goes. And then the license application process, again, it I don't. It's hard to put a timetable on it, but most of the questions are going to be where they want to know about the business, how you're operating. Then you get the
Yeah.
financial statement audit that's passing on a report. So.
So and generally for the money transfer license, are those usually granted towards games? And how many of them are towards like crypto projects?
I haven't seen them towards games
Oh,
necessarily. Mostly those are on like the exchange side, and then also applications that are allowing people to transfer U.S. dollars into crypto and move it around that way. I mean, that's really what it comes down to: is if they're
yeah.
accepting fiat dollars and allowing them to be transitioned to crypto or buy other assets. That's where they have to get those licenses.
Do you know who gave that, or eventually who anyone that worked on OpenSea's licensing their MTL?
I do not.
Is that something that you've worked with, not just crypto, but crypto in conjunction with NFTs and going back and forth between the two?
Yeah, so admittedly my experience with NFTs is a bit limited. We have gone we've worked with some clients on the gaming side issuing NFTs, but we haven't completed that process. So kind of in the middle of it right now.
Yeah.
But from a licensing standpoint, I mean, there's not the NFT, having an NFT is not necessarily going to make you have to get a specific license. But again, if you're selling them on the market, like
Yeah.
OpenSea being an exchange, they may have, but I don't know for sure.
As it seems that in the space, there's a lot of people getting into it. Earth 2 started with just a land sale of a different bunch of these tiles on the blockchain. And then you have other companies like Illuvium that's getting into blockchain gaming. You had Axie Infinity, and then Vivi with their digital licenses, like with Disney and Marvel and Star Wars, all their IP with crypto. It just seems like that's the way the world is going. Is your company going to have a separate division specifically for that, or is it just whatever comes comes?
No, it's a good question. I mean, we've built a separate digital asset practice. And since I've been here, over a year now and a couple months, and we've built the team up to, I want to say, about 30 people, and those 30 people are spanning expertise across the whole sphere. So, we've got Bitcoiners know it in and out. We've got NFT experts. I do think, I think we're probably on the same page and bullish for the industry that eventually it all grows to the point where within the digital asset practice, we most certainly probably do have another sector of specifically NFTs, Bitcoin miners, et cetera. But at the moment, yeah, that's absolutely how we built our team. I wouldn't say that it's, there's a dedicated practice for each niche yet, but we certainly have individuals who are experts in those areas and keen on them.
So Sandy Monroe is a engineer, very good, and he would, part of his job, like on YouTube, would be to take different cars and break them down and comment on the engineering of it. And as soon as he started doing it with Teslas, he immediately invested. He's like, oh, these are unlike anything I've ever seen. In that same breath, you being so intimate with the crypto space and having worked with it, what are some of the things that you have worked with, whether it's, Binance, Cardano, Solana, Omi, whatever, you go and say like, oh, this is different. This is definitely not a security. This is something that I can invest in. Or can you not say?
Yeah, I can't really say. I mean, the public companies that we work with, that's all public knowledge. So, people can go look that up. But, so yeah, I don't want to call out like specific clients and things like that. But what I can say is, I think I'm very much still excited about, Bitcoin, Lightning development, things on that nature. I grew up a gamer, and, you'd put a lot of hours in these games, right? And, Warcraft, League of Legends, whatever it was, Warcraft, StarCraft, you put a lot of hours in these games. And in some of them, right, you accumulate all these, the gear and stuff. So I love the NFT gaming side, because ultimately the only thing that meant was you could maybe sell your account, which of course was illegal in the gaming company's eyes. And so you'd have to do it off. But even then, like, you're not really getting great value, and you're giving up the full account to do it. So I absolutely love the idea of like NFTs in games and being able to have like, all right, well, I've spent all this time in a game, earned an actual asset that I could sell without getting rid of my account. And, hopefully, ideally, in my mind, that item transfers to new games, right? And things like that. Yeah. So I think that stuff's cool. I think the DeFi space is really exciting. I think we're seeing a natural flush out, right? Where people that were participating in that and were over leveraged are going to get liquidated. There's no safety mechanisms in the crypto sphere still. So when the pain comes, it comes hard, and the strong projects that are sound and, have thought out the long term are going to survive. So
agreed. There's a couple things I'm really excited for. ETH 2.0, I've been waiting. Everyone's been waiting on for like years. There is my friend Tyler took out I don't know if he like did a cash out refinance or he just did like a equity line of credit where he got a lot of money for like, I think like 2.5 or like 3%. And then he started staking Ethereum for like, I don't know, like 6%, give or take. And he was pretty happy up until recently where Ethereum kind of took a tank.
Yeah.
But when you have something like staking and securities, like what is something that throws up a red flag on your radar that would make something a security, and what would keep it safe?
Yeah, the security discussion's a tough one, because like obviously we've got news now of they're suing the individuals at Coinbase that are trading, and now because of that suit, Coinbase is under investigation for allowing securities to be traded.
Yeah.
When I first got in the space, it was 17 time. We fielded a lot of calls with people who were creating tokens, and that was our advice, was you need to get legal counsel and really beat up unfortunately the Howey test is what you have to go by. It's old, but that's the law. That's what the SEC is going by. So, ultimately it comes down to if there's a core group of individuals that start a chain, and even if it kind of ends up decentralized, by the Howey test, if there was individuals who controlled it, benefited from the initial sale, that it's likely a security. And when you frame it like that, like a lot of altcoins have a team behind them that started it, right? And I mean, even ETH to some extent, that argument is obviously thrown out there by people. And my stance is not necessarily to call out which are and which are, and it's we need the SEC to just come and set the record straight. Like, these assets that were included in this Coinbase lawsuit, like a couple of them I had never heard of. Like, they're pretty small cap, so it's like, why those? I mean, obviously those individuals were trading in them, so that's one of the big reasons. But if they're investigating Coinbase conversely now, I'd argue, like, well, what else is in there that you're looking at? And then more importantly, does that mean every other exchange should be delisting these assets? So I think they need to really clarify, and the industry's been ready and asking for it. It's I work full time, right, auditing compliance for these companies, so they're not trying to hide. They're just dealing with pretty gray areas, and so that, I mean, we try to look at the Howey test, but we certainly talk to people's legal teams, because that's ultimately who you really want to consult with. We're CPAs, advisors. We know when we're certainly able to tell you need to go get legal and make sure you make that determination. But it's really what we got, the Howey test. So
I've been asking a lot of these questions because I don't know if Josh told you, I've been very invested into the Akomi company, which has the VV app, which has all those licensed NFTs. And then they also have the OMI token, and OMI has it is deflationary. Again, it was started by a core group of people, but for the most part, it is going to be utilized as for now, just as buying NFTs with it, and you could stake it, not necessarily getting more OMI for it, but you'd get different rewards in the VV app for that, and then eventually, I feel like OMI could be used for anything, like for other NFT projects, et cetera, et cetera. So that's why I was kind of asking a lot of those, just kind of making sure OMI being clear.
Yeah, I mean, and I'm not familiar with the Omni token, as I certainly have heard of VV, especially on the partnership side. But if it has that utility for a specific use, right? It's not necessarily like ownership in the chain, things like that. I think that's where there certainly is an argument to be made that it's a utility. It's not the same thing, but that's, again, we'll see. I mean, that's what's kind of stinks about the current SEC like actions, just because it opens us up to more questions.
No. Is there, I mean, I don't know if anyone that you work with or might work for might say this, but at some point, maybe in the future, long ways away, short ways away, whatever, if let's say a company like Meta or Disney, if they get an NFT space, like their own like Web3 space, if they were to pay you to try to help educate lobbyists or policymakers, is that something that you might do, or is that politics getting too messy and you wouldn't want to deal with that?
Me personally?
Yeah.
No, I mean, I think education's important. I'm a big fan of groups like the Digital Chamber of Commerce. There's a Bitcoin advocacy project now with Dennis Porter's running. So I think education is important. So yeah, absolutely. I think it's better from industry participants than maybe, a Meta, but
that's true. Washington hates Zuckerberg, so that's a good point.
So yeah, I mean, I think it's important now. I think too, like it's you see it clearly, right, with a lot of, especially like attacks on proof of work. Statements about, you see like Elizabeth Warren referencing studies that are projecting out Bitcoin's energy use as adoption occurs, which is not how the network works, right? Like, if everyone in the world started using Bitcoin today and no additional miners came on, the network would work fine. It's not a transaction energy per transaction energy cost. So, that's where I think, there absolutely should be education, and hey, we need to do it. So we'll just hope they come to the table first before putting forth, some strict rules.
I'm glad you mentioned the Digital Chamber of Commerce with Perry on board. She'll be on the podcast at some point in the next couple months, so that'll be fun.
Yeah, they're great.
Have you worked with them?
We participate on the committees. We participate in a letter to FASB, so that's Financial Accounting Standard Board. That's who sets accounting rules. And essentially what that letter was saying is, hey, we need to get very clear-cut rules for digital assets, one, so they need to address it, because still today, 2022, there are no authoritative guidance for accounting. So what that has meant is conservatively, the industry has defaulted to crypto are intangible assets. And so for what that means for accounting rules is you have to carry them at cost. So you buy a Bitcoin at 30K and it goes up to 50K, you don't do anything. It's still 30K on your books. If it goes
Yeah.
down to 20K, you have to write it down into an impairment. And then even if it goes back up, you don't adjust it back. So that, it makes the financials confusing if you're not aware of why that's happening. And
And
it's
it disincentivizes you.
yeah. And it's a lot of extra work for these companies' accounting teams. Us as auditors have to then go do these impairment assessments when really, so the letter was encouraging them to not only take up the issue, but then move it to a fair market value measurement with, whatever date your financials are, you look at what the fair value of the assets are, and that's what it is. So they voted 7-0 to take up the issue and look into it. So I don't know how long that'll take, but they have taken it up, which is good. So that's a good sign. And that's, everybody who wrote letters, was industry wide, but Digital Chamber specifically helped, push that through too. So
Yeah, I would say that I think that there's some that might change in January, February. I think there's either a bill or a change to that coming, hopefully.
From an accounting standpoint,
Yeah.
I don't know that there's a date out there. There may be, but I'm not aware of one. At least, not right now. But
Yeah, there's a guy named Crypto Rain that he had looked into it like a whole. He went deep down the rabbit hole with it and said, I think it was sometime next year that there was some type of policy update with that Bitcoin accounting. Again, I'll ask him about it. I'll let you know.
Yeah, I'll definitely check it out too after this.
Some other stuff that I guess was recommended that we talk about was Trust Explorer and kind of what that is and how you utilize that.
Yeah. So Trust Explorer is an Armanino product we developed specifically from our digital asset practice for the space. And, very high level, what it's doing is if you have on-chain assets on-chain tokens backed by real world assets, we're kind of auditing that. Well, we're doing an audit of that in real time. Now, the report is what's called an attest report. So it's different than an audit. An audit is really we're beating up an entire company's financials. And a test is we're keying in on the on-chain token and the assets behind it. So the most simple use case and some of our clients are stable coins. So they've got US dollars as tokens and dollars in a bank. Our Trust Explorer real-time attest report will allow you to go on, download the report at any given time, and it's going to tell you how many tokens are on chain and how much cash is in their bank at that time. And it's a signed report from our CPA team. And so that's something we're pretty proud of. And then, other examples are like carbon credits. If you've got people have taken carbon credits and tokenized them on chain, same kind of process. We're kind of doing a check on both those. And so, that's something that's only possible because of these public blockchain protocols, right? Like you can give us wallet addresses, we can queue up and show the world what is in there.
That's what I love, having everything out on the blockchain where anyone can go, whether it's like a Mutascan or anywhere, and just say, hey, this is what they're doing with it. This is what they're doing with their funds. How soon do you think that might come to governments saying like, hey, here, all of our budget is on the blockchain and you can see what we're doing with it? How quickly do you think that might be adopted?
I don't think that will be adopted anytime soon. We'll see. I think one thing that was cool when I met Josh here in Ohio was when he became treasurer, he created a site called ohiocheckbook.com. Yeah. And so that put all the spending online. Now, different than a blockchain, right? Because someone had to go compile that data, put it online, and then from there, I'm not necessarily auditing that data the same way I could like on-chain assets. But so, I think there certainly is an appetite for people to get a little more transparency into spending. There are cool projects, even outside of blockchain, like Steve Ballmer's got a pretty cool data site that just pools government spending metrics. But it's lagging a couple of years because that's a huge task. So we'll see. I mean, it's a big undertaking, and then even with like when we talk about CBDCs and you read articles about those, like, I question how much of that truly will be transparent. Will you know whose wallet's whose, or will it be more of a private blockchain where, yes, you get kind of some of the benefits, but the transparency side maybe isn't necessarily one of them. So we'll see.
I think that in the In the future, it probably will be just because you have like Twitter accounts like that track Nancy Pelosi's stock trades.
Yeah.
And if people can do that, I'm pretty sure a lot of stuff that could be on the blockchain, or at least a lot of the stuff to be tracked, would be probably a bit easier, I would hope. But that's a really fun account to follow.
Yeah.
Some, yeah,
Those accounts are great. Yeah. I mean, I think in my mind, the best case, like it's one of the reasons why, as I got into space, got super infatuated with Bitcoin, is that I think getting a sound money kind of new asset in the mix is almost the best case scenario, right? Where it's all right, you've kind of separated the state from the printer. They've got to abide by the same sound money supply that everybody else does, and therefore that kind of puts them in check a lot quicker than maybe us being able to see what they're spending. Because right now, I mean, to be fair, a lot of that is transparent. It's just always historic looking rather than what we could get in real time. But so we'll see.
So you said you're very big on Bitcoin. I see the Bitcoin cup in the back, which I think you're using as a pencil holder or a writing implement holder.
Got some pens, yeah, highlighter.
In the What do you say? What do you think might have been your greatest investment so far? Do you think did you buy Bitcoin back in 2017 or 2016 when it was like 4K?
No, well, so I was, well, everyone always feels like they're late, right? My story is I had a good friend telling me about it when it was like $600, and I, like most people, kind of Googled it, asked a couple of financial advisors I trusted, and was like, yeah, you're nuts. And then he came back, a little bit later in early 17, and was asking me all these tax questions, and he did very well, and my light bulb moment was he pulled up a block explorer and showed me, this is my Bitcoin wallet, so I could see all your transactions. So I was an auditor at the time, and I was like, that's amazing. And so from there, then, like most people, you go down, all right, how does this work technically? And then, well, why is it worth anything? And that's where I went deep down learning about the Fed, how the US dollar works, history of money. I'm a CPA, so I'm in crypto and some people think I'm nuts, still a CPA accountant, so pretty conservative on the investment side. So I'm an average in type of guy. I didn't make any like crazy buys, but yeah, I mean, I'm very comfortable kind of treating it like a savings account, continuing to just allocate a little there, and certainly, yeah, I mean, I look at alts like everyone else, but it's anytime people are asking me, I'm always, hey, it's like any other stock or penny stock, right? Like, who knows ultimately where it goes price wise. It's very much look at the core process, and if I think it's going to be here in 10 years, then I'm probably putting some money on it.
I am the complete opposite, where I go all in. Like I mean, put everything. Like I did that with Tesla. I did that with Pokemon cards. Most recently, I did it with Omi, and it's done really well so far. Everything I've done, but this is definitely the last time I'll ever go all in, on one thing.
Yeah.
I mean, it'd be impossible. Not impossible, but it's a lot easier to go all in when you just have a couple $100,000 versus if you have like $8 million. Putting that into one thing is probably a little. Have you had clients like that just like, yeah, I'm gonna put like 60% of my portfolio into one thing?
No, I mean, not that I'm aware of. Like, I guess, again, we're on the audit side. Like, we're usually dealing with it after the fact, anyways. Like, they're coming to us, all right, now I need to pay tax. Here's what I did. Yeah, and for the most part, we're not advising on the trades to make.
So is it? I haven't done it yet. I've heard that this is something that can be done using your crypto as collateral and then taking out loans based on that, so you don't have to sell your crypto. And this way, that loan sits on your account as a debt, and you actually can write off or at least balance out some of the gains that you've had.
Yeah, so I mean, we're aware of products out there. I've seen, again, could count on one hand clients that I've kind of seen do it. But yeah, that's absolutely. I mean, that's a big case. I think Michael Saylor's talked about this, where people are always asking, what price do you sell your Bitcoin? And his comment back is like, well, I probably won't. I most likely just put it to work by doing exactly what you're talking about. Like, I'll offer it as collateral, take a cash loan out for what, spend it what I need to on, and then pay back the loan and get my Bitcoin back at the end of it. So, I very much, just like our financial market is really robust with products, and there's a lot of different things you can do. I see crypto moving the same way, and as people get more comfortable at the institutional level with it, I think like you'll see more and more legacy companies starting to offer it. like we have, right, with Fidelity diving in. I think Goldman's been getting it now. So
I think it was Fidelity that came out with an article saying that, Bitcoin is too volatile for anyone to invest in. So we're only going to offer it to our clients that have like 8 figures or more. And I thought it was great. Is this okay? It's cater to
yeah,
that 1%.
it is funny when you see like we had the run up we just had. I remember seeing an article like, it's nonsense at 60,000 that Bitcoin and ETH at 4,000 is for the everyday person. And I think when I see that, I always kind of like bite my tongue, but well, not bite my tongue, but I want to talk to these people because it's like, Bitcoin or any of these networks, right? Like if you put $10 on versus somebody who's got 20 million on, the network works the same way for each of those participants. And I think that's the key point is that, I can get just as much security as the biggest whale does and use it the same exact way. So, but yeah, I guess that's that accredited investor mindset Fidelity has, right?
Do you know which banks offer that? I don't know which ones would be able to do that to have your crypto as collateral. And is it just Bitcoin, or can you do that with Ethereum and other things as well?
So the only ones I'm aware of, so BlockFi is one that I know is active with the lending. I think they only take Bitcoin, but don't quote me on that. And then I thought Fidelity was doing a product too with a Bitcoin loan.
They might. I haven't checked into them in a while.
Yeah, so I mean those are the two I've seen. But yeah, I'm not aware of like any legacy, like a JP Morgan or anyone offering it, anything like that just yet.
So with your work in all this, do you ever see Ethereum as far as market cap goes? Do you ever see that flipping Bitcoin?
Yeah, I mean, maybe. It's hard for me to like get into the market cap discussion, because if Bitcoin, right, becomes like this, let's say it meets gold, right? That's a $10 trillion market cap that gold's at. So if Bitcoin beats that's where we're going. So then the question of ETH is like, does enough get built on it to meet that? And I think it's possible. Absolutely. I mean, you look at, stable coins like, and not obviously you have like experiments like Luna that collapse, but like ultimately the just dollar backed stable coins are really big. And, the reason for that when you start to look into it is that there's people around the world that want US dollars. They want to transact in it, but they can't get into a bank to do so. Well, now they can go get a token and transact with it, which I think is good, not only for ETH, obviously, but for the US dollar as well, because it's people want it and it's allowing them to get there when they couldn't. So it's more demand, more use, which is good. So yeah, and again, I don't view ETH and Bitcoin really as like competitors per se. I think they're very different things. And so, but I do think ETH's market cap really depends on that utility of everything built on it and how much people are able to use that and how big that gets. So
I was asking because I think what you said, a $10 trillion market cap would be like $500,000 per Bitcoin.
yeah, I forget the math per coin, but yeah, you can do it.
I don't know how you feel about Cathie Wood. I personally love her. She's bae, and she had mentioned that by 2030 she expects the market cap of Ethereum to be $20 trillion. And I figured, okay, well, if Bitcoin were to have to match that, it would be about $1 million per coin. And then Ethereum, I think, would be like, well, I think like $100-something thousand per per Ethereum, which would be wild. Is in any world does that seem possible? That $20 trillion market cap for either of those? I mean, I think so, but I'm a little bit of a moon boy. So
I mean, it's really hard to say. It's like part of what's interesting in that discussion, right, is like we're pricing these things in US dollars, which obviously continue to inflate. That's while it's been recently pretty heavy, it's always been happening. Where it was 2% a year, like we're just at a more extreme. So if that continues and they can't, I mean, we know it's not going to stop. It's not going to go to zero. So in my mind, when we talk about these large prices, like they don't seem as, moonish, right? Like it's like, naturally you just look at the price of things, they are going to increase just by that factor. Then you couple in adoption. And again, the thing to remember is like these things are global. So if they take off, it's not just the US market. It's literally everyone that can participate. So it makes those seem a lot more, not as outlandish as they seem. But again, I don't go too hard in like trying to predict where it ends or what the price is.
Yeah.
So, the other piece, right, is that I do, people move on and off, right? And they're constantly doing that. It's 24/7. So that's where you get a lot of the volatility from. So who knows how long you stay there. So we'll see though, right?
That's a good point. Can't wait. In all the time that you've been doing this, what are some aspects that you think make a great company that has a great token?
Yeah, that's a good question. I think a sound understanding of economics is key. Not everybody, like a lot of projects that collapse, while there are certainly people calling them out, there's always, there's certainly people that are advocating for them and think they could work, right? And these are smart people. You look at Luna, there were plenty of smart people on both sides. I certainly think, your red flag goes up when you see people calling it like risk free or anything risk free, for that matter. But ignoring those extremes of someone pumping something as risk free and things, I think a sound understanding of economics, a slow and steady pace in terms of how they're rolling things out, how they're getting the coin into market, and if they're complying, right? Like Daquan was very vocal about his disdain for compliance, especially U.S. regulations, things like that. In hindsight, that probably should have been more of a red flag piece. I think we're all here because we're excited about separating some of these assets from the state or just large central parties. But that's not necessarily, I don't think necessarily the ethos then moves to like unlawful behavior, things like that, right? So yeah, I really think like it comes down to that, especially when you're issuing a token. Like, have you gone through the compliance? Are you kind of working with a sound economic and not just a circular kind of setup where it's like, we issue the token, you hold it, you get yield, but only if you keep giving us money, right? Or if we're only collecting more money from someone, you kind of think about it that way. And then obviously has to offer like a utility, meet a market need. Not just slapping blockchain on something because blockchain's the hot tech right now. It's really kind of understanding a use case and solving something.
Yeah, I think it was SEC, like I forget how many days ago they had come out with a list of like nine different cryptos that were going to be labeled as securities. And I went through the list and I noticed that Hex was not one of them. What's the final straw that makes something a security and what doesn't? And how did Hex kind of escape that?
Yeah, so that list is what I was alluding to earlier with that's came out of the investigation. They're charging the Coinbase employees for insider trading, and then conversely now be investigating Coinbase because to charge them with insider trading, they have to be trading securities. So I don't know enough about Hex to comment. I can tell you the Howey test essentially comes down to, is a central company issuing these tokens or equities to give ownership of the company? Do they benefit from that? And there's a couple other a couple other pieces of the rule. So again, in my mind, it comes back to just is looking at the Howey test and assessing each token by that. I can't tell you why the SEC has only listed those 9, right? Because, and again, I don't know enough about Hex to comment, but like if those 9 meet it, it's not just those, right? There's 2,000 or 3,000 token out there that probably trip that test. And I really can't tell you why the SEC's keying in where they are.
No, that's a good point. All right. So if there's a company, let's say that, already has existing infrastructure, let's say like Disney, Universal, whatever, and they decide to create a token on their own, what's the first thing they have to do in order to stay compliant?
Well, it depends on what kind of route they're going to go with it, right? Let's just say it's just a utility token where maybe Disney makes a token that you can only spend in Disney parks. And, I view that. So they don't have to do a ton, right? It's kind of like Chuck E. Cheese having tokens for their arcade.
Oh, that's a good point.
Yeah. So they really just, as long as it's within their grasp. Now, if they want it to be, to some extent, like agnostic to their company and they want to have it where it could be traded on open markets and used for other things, then that's where you start to go down the path. You'd want to hire legal to really beat up, like, all right, make sure we're not tripping the Howey test as a security, but then are we transmitting money? Do we have to comply with like know your customer laws, things like that? And that all depends again on if outside money is coming in to be able to use for the coin, and then conversely can go out and be sold for it. So,
that's a good point. Is there any companies that you've seen recover? I know XRP is kind of, I think they're winning. Is there any companies that have really gone under the thumb of the SEC and kind of survived?
I mean, you can certainly, like, the SEC charges people, right, and then there's a fine and they pay it and they go on. I think like EOS was a good example of that, where they got fined by the SEC, and they had like, my numbers aren't going to be 100% accurate. Everybody can go look it up. But like, say the fine was like 200 million. Well, EOS raised 4 billion. So they raised 4 billion in a non-SEC compliant way, got fined and charged, but they paid the fine and went on. So
they paid 5% what they raised. And,
yeah. So I think, I mean, though, the good thing about the SEC, right, is all that stuff is public knowledge. People can kind of start to look it up. And yeah.
Okay, good. Thank you for letting me pick your brain on everything. What do you think about in the macro? A bunch of numbers are coming out tomorrow. I think Walmart had said they had changed their numbers, that it's going to be like negative, like 13-14% like growth this year, because they had to sell a lot of the stuff at a discount. The stuff that is selling really isn't high margin. What do you think that does to the space?
To crypto?
Yeah, I think the Fed said they're raising 75 basis points, which is not 100, so that's fine. I think markets did rally today, but when other numbers come out tomorrow, what do you expect?
Yeah, I don't know. I guess I've curtailed my expectations just because recently we've been pretty rocky. I still think, like, I don't see anything in the macro environment that makes me think to not expect continued kind of just some rockiness, right? Like, especially when you kind of look at the issues overseas with energy prices. I think anytime energy skyrockets, that's tough for people to handle. And especially when then you think about, that alone is tough. But then you think about, we've got supply chain issues, we've got war going on. I mean, it's not a pretty picture. I think people definitely go way more doomsday and get way bearish when they do, just like they do in bull markets, right? Like, everything was never going to go down again. And that obviously isn't always accurate. So I definitely think it's going to continue to be a little rough, probably for the foreseeable future.
Yeah.
When I say that, just kind of toward to the end of the year. But yeah, I mean, I think curtailing expectations and that mindset, looking at that big picture, it makes sense that Walmart's saying that, especially all the overseas products we get, right? That energy increase, let alone ignoring the supply chain side, is a big deal and is going to have a ripple effect. So
I haven't heard too much about the war with Russia and Ukraine recently, and up until I think today, where it came out that the president of Ukraine was on the cover of Vogue magazine, and it's like, how bad can the war really be if the president's doing model shoots for Vogue? That to me, that kind of tells me that maybe it's winding down, and hopefully it's not as bad as it once was. I don't know if you've kept up with that at all.
No, yeah, I can't say I've kept up like as closely. I mean, I'm seeing the headlines, people, probably everyone else is, just that it's still going on, right? I think we just did another aid package, so we'll see. Yeah, I mean, I obviously definitely against war of any kind. Like, it's not good for anybody. So hopefully it gets resolved, but we'll see.
What do you think is the main catalyst that'll help get us out of this recession, if the government decides to call it a recession?
Yeah, I'm not sure what a recession is anymore. That's a good question. I don't know. I mean, you generally look historically, like, you're going to have the Fed tightens up, right? You get a recession, and generally when the Fed starts to slow down, capital starts getting allocated. People feel more comfortable getting allocated. And when I say slow down, it's not necessarily like dropping rates. It's just that when we get to a point where we know that they're comfortable with where the rates are at, the markets will then be able to start, all right, I can take out some capital with an expectation that I can understand my costs. So I think that's what starts it, and then from there, again, that macro picture hopefully calms down and
Yeah,
start
slowly
back.
but surely.
Yeah.
All right. Well, listen, thank you so much for coming on. Is there anything you'd like to say to everyone before you bounce?
No, that's a good question. I appreciate you having me. Everybody, I think it's do your research. I mean, my favorite thing about the space is, I was probably 4 or 5 years into my career when I had that discussion with the buddy and I got into Bitcoin. And if you would have told me 5 years ago, like all the books I would have read, all the podcasts I'd be like, attached to, all these people that I'm constantly reading their articles when it comes out, like I probably wouldn't have believed you. I think, there's so much to learn. And so my 2 cents to everyone is like, don't necessarily get caught up in that buy and then trading make money side. Like really learn how this stuff works, because it is amazing. And now plant your flag in Bitcoin, and that doesn't mean that's the only thing you learn about, but I do think it's important to start there because that is what spawned all this, and it helps you gauge, right? Like when people say a blockchain is completely transparent and immutable, it's like, well, not every like public blockchains, yes, but
Yeah.
so understanding those characteristics, how they apply to Bitcoin, really helped me navigate the rest of the market and kind of just understand what I was looking at. So that's always my encouragement to people, and read about history of money and understand that it's always just been a tech. It didn't always have to be issued by the state necessarily. So
Yeah.
Keep an open mind.
All right. Thank you very much. I'll ask you to stay back for 5 minutes to talk to you off camera real quick. Everyone,
Sounds
thank you for watching. I would say bye-bye to Dashi. Bye-bye, Dashi. All right. Ending broad.